Hi guys, good morning. This is gonna be the start of the videos that I release on Patreon that basically are going to be teaching you guys how to trade. I will try to, um, record everything as possible. It's probably gonna be split up into series. So the first one will probably be support and resistance, and I will try to figure out um, every single I can't believe I'm forgetting the word, but I'm gonna be like every single instant, not instance, but Jesus, I can't. I'm like blanking out right now, but I'm gonna show you guys everything that I know about support and resistance. What how to how to place your support and resistance when there's a rising, when there's such a huge rise in price like this. Um, when price is consolidating, when there's a bunch of when price hasn't moved for like the last year, et cetera, et cetera, et cetera, right? So I'll let you guys know exactly. For this case right here, we're gonna be focusing on support and resistance on rising price action. For example, like this. Whenever you see a rise in price that's huge like that, for example, like Solana, or maybe we can um, you might experience this with something like meme stocks, or maybe like GameStop, AMC. When you see such a huge raise in price and you see nothing but bullish candles all the way up, right? So you went from on Solana, you went from 27 bucks all the way up to 213, 217 ish. So almost a 10x rise, right? But when it comes to these are actually the easiest to do support and resistance on, because it's a very, very, very obvious place to put them. Um, and the number one thing that I do with support and resistance is I like to set my support and resistance based off of current price. So usually right now, for example, for if price, for example, let's say that everything right here and forward didn't exist, and all you did was, all you had was here, right? I would only base my support and resistance based off of the current trading range. So I do maybe like here to like there. I pick a spot, and I would add my support. I would add support and resistance here, here, whatever, right? But there's no reason for you to like go all the way back over. Let's say price was like down here somewhere. There's no reason for you to add support and resistance down here. You have to focus on a certain range of the price action, right? Because there's no need for you to put it down here unless you actually see Solana like huge, like have a massive dump on the downside and go down here, right? You're wasting your time if you put support and resistance up here, down here, or maybe if it was trading back like at $1,000, like 2 weeks ago, right? It wouldn't make any sense. You have to focus on the current trading range. But again, that's usually what happens when you have price consolidating, which we don't have now. We actually have this super long rally that Sol just did, right? So I'm going to show you guys the very first example of how I would use support and resistance when you have an example of price running super hard like Sol. For starters, if you're on mobile or if you're on desktop, if you're on mobile, you can go down here where it says 1W next to the ticker name. So you know how it says Sol USD down there? When you click it, it goes to the actual, the tickers that you can select, but it's down here, right? Down here somewhere. Um, whoops. So right there where it says 1W, you click that, you're going to have a massive amount of time frames, right? Or chart times. Trading view likes to call them intervals. I just call them time frames. It's the same thing, right? You always want to go to the week. And the reason that I always use the weekly chart is because the weekly gives you major zones of, or major areas of support and resistance. And what a lot of people assume is that these support and resistance lines have to be, are going to get hit, and that is going to be, that's 100% false. You have to think about these more as like areas as opposed to actual support and resistance. Because I've been trading for a while, I don't really need to use like an area. I can just use the actual line to kind of get an idea of where it's headed. But generally, what you should be thinking is, I can set a support and resistance. I can set like support right there, but it should actually be more something like this, right? It should actually be more like this. it should actually be like an area, more than an actual, support, more than an actual line. I'm sorry. So whenever you put a line like this, like support and resistance, think about it more as an area, right? The reason I just put lines is because it's a lot cleaner on the chart. It's easier. It's just easier all around. But I know that it's more so an area as opposed to an actual just a one single line, right? That's not the case ever. Just so you all know. That the line doesn't necessarily mean that that's an exact price point. It means an area of price that has been that's very important, right? So let's start from the beginning to the top. And again, this example, I'm just using a very long rally. And whenever you see a rally like this is exactly what you should probably do, right? So always go on the weekly. Regardless, it has to be on the weekly. You don't want to put your support and resistance on the daily time frames, on the 4 hour, whatever. I can talk about that later, but for now I'm teaching you guys the very, very solid basics that you need to have really good structure, or really have a really good market structure, right? And generally how I would use this is I would put it on areas where there are a lot of wicks. And if you don't know what a wick is, also, first of all, this is a candle, right? If you guys can see the little blue dot on the screen, a candle is this big highlighted rectangle. That would be considered a candle. A wick is the little skinny thing that actually goes on top of it or below it. To go a little bit further into wicks are basically just testing of price, and the candle is the actual open and close, right? So when you have a candle open, you actually have the candle open. Let me see. You actually have the candle open here, right? So the bottom part of the candle is the open, and the top part is always going to be the close. I know it's kind of weird. Usually you would think the open would be on top and the close would be at the bottom, but no. When you actually have a new candle created, the open would be the lowest part of it, and the close would actually be more than likely the highest part. That's usually what happens. But as of right now, like this is generally the price, the major the candle is usually the open and close. But during, let's say we're in the week, right? So for example, we'll use this yellow candle to the right. The wick is down here, and it just means that price opened here at 174ish, and it's been just going up and down between this, right? That's all it's been doing this week. All it's been doing is just going up and down between 174 and 149. So you can see on the weekly that basically this is all it's been doing. And this could be another strategy that, I'll go into it a different day, but this could be another strategy that you can use in the long term for short term trading and stuff. But the way that I actually use support and resistance is by looking at all the wicks, these little lines, and looking where they where they happen the most, right? So on top here, there's what I usually do is I go on the actual wick, and I'm like, oh, you know what? I'm gonna go down and I'm gonna see if it hits with any other wicks, right? And you can't see it, but there's actually a really, really, really tiny wick right on top of this candle that got made, right here, this yellow candle. There's a really tiny wick. I don't know if you guys can see it. I can probably zoom in and show you guys. Let me see. I'll actually zoom in just to give you guys a better idea. But if you zoom in, you can see there's a tiny, tiny wick. You see that little tiny wick right here? Tiny, 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 tiny wick. And that's usually what I use to really determine, what is it called? Let me get this a little bit tinier. There we go. But that's usually what I would consider resistance. So resistance is always going to be higher than price. Support is going to be lower than price. Just to kind of throw that in there. But I would start by, keep in mind, this is the actual week of September, right? So this is a brand new week candle. Generally, I wouldn't actually put anything here, or I wouldn't use this candle to put in support and resistance, because it's it's still ongoing week. So I wouldn't really care too much about where this is, because it just got made, right? So I wouldn't use this as on here. I don't want to teach you guys bad structure. So in this case, we're not going to be using the current week's candle, because you're not supposed to be using it anyways, because this candle can go up and down, up and down. We have 6 more days of this, so this is not reliable, right? So you would have to go all the way to the top, possibly. You don't have to do this, but sometimes I like to actually put it on the high. So this is the actual high of Sol, the all-time. So I put it there. I put one right there because it's marking the all-time high of Sol. Second one is going to be here, right? Where you have one wick right here and you have another wick down here, and they meet in the middle somewhere, and they meet in the middle like right here, right? So that's where I add another support. Same thing here, same exact thing. You guys see how wick, you put it right in the middle. Same here, wick, they touch, or they kind of, they're in the same area, right in the middle. Wick, right in the middle, right? And you can see here, right? When we put the wick right, when we put the support right here, you can see that it actually touches previous support also. So it touches this wick and it touches that one, right? So that would actually be, that's actually a really good, that would be another instance of what's going on when you add it here. Obviously you have wicks touching here on the other side, right? So now you're obviously going to have consolidation, but let's put a wick down here where it hit the lowest, right? So right here, we actually have this long wick right here, wick. So you would actually put it, you know, touching all of them. So I'm going to have it touching this one right here, this one, and this one. So watch, I'll add it in, and you want to keep going all the way up until all those wicks touch. And you want to see like, hey, how much space do I have before, you know, you go over a candle, right? You don't want to go over a candle. You want to go as high as you can to see if you can touch anything else. And I will actually go here because there might be a wick. Actually, there is no wick there. So you know what? I think a good stop would be right there. You know, and the reason I stop right here is because you have a wick touching here, wick touching here, wick touching here, here, and right there. And you can actually you can maybe do the same thing here. Yeah, actually you should. So we're gonna add support, or we're gonna add support right here. So wick down here, wick, because you have 1, 2, 3, 4, 5. You have 5 wicks touching, right? We'll set it up right there. And generally, it's, you want to add it where there's just a bunch of when there's a bunch of wicks being in the same spot, right? So if you like I said, wick, all these wicks, you want to base it off the wicks, not off the candle. You never want to base it off the candle because the candle isn't reliable. The wicks are. And that's basically it. I mean, you know, we'll talk about consolidation on a different day, but as far as when you see rallies like this, you want to add the wicks in between where the new candle opens and the previous candle close, right? Or generally just where the wicks are. That's going to be your best method to figuring out where price can actually retrace to, or at least where the major support is and major tops are. Like for example here, I wouldn't be surprised that we actually come back to, if crypto keeps falling, like I wouldn't be surprised if SOL actually comes back down and retouches 142 before blasting off again, right? Of course, it doesn't have to do that. I mean, you can actually zoom in and figure out with previous, see, and you actually have consolidation right here, where that bullish candle, bearish, bullish, and then you had a pop. You actually have it right there. See, and I tell you, it's generally this area, right? So like I said, it doesn't have to, a line doesn't mean that you're actually trading on an exact price. It's more of an area. So if I had to do an area, it'd be more like this area right here. It'd be more like, actually it would be like this area, because I don't want to use this wick from a candle that's higher than the previous area, right? So generally it's going to be this area, not necessarily just one line, but remember, it's support and resistance is always going to be an area. I just use lines because it's a lot cleaner on the chart. But yeah, this is basically it for this example. This is specifically just for when there are rallies, right? And you guys can go back to this video, take notes, whatever. And I will be releasing more videos as you know, as the days come, as the weeks go, explaining everything from, you know, basic market structure to support and resistance to what trends are, you know, to how to use the reverse MACD, et cetera, right? So keep an eye out for all those videos. I will definitely be releasing more and more as the days come. But this is going to be the first part. This is just, you know, basic support and resistance structure, and I feel like a lot of people don't teach it this way because a lot of traders actually use the daily, which I don't like, because I used to actually do all my support and resistance on the daily until I found that like 90% of the time the dailies get broken, and they actually and price actually tests price actually retests major weekly support over anything else, and you know, because the monthly is too far and the daily is too tiny. And I found the week to be a very solid solid medium of both, right? So when it hits support or it hits resistance, there's a major there's major resistance or major support. So if it breaks something, it's a really good indication that it's going somewhere, right? Whereas in the daily, you can probably have multiple retests of certain prices, and it won't do much, right? But I use a daily because statistically and the probability goes up a lot higher than using the daily, and I hope that makes sense to you guys. But I'll explain more of that throughout the videos that I release. But yeah, this is specific. Like I said, this one is specifically just for when you see big rallies like this and how to add your support and resistance. The next video I'll try to do what how to set your support and resistance when price is consolidating, and then we'll kind of move forward from there. But thank you everybody for joining the Patreon. I love you guys. You guys have no idea how much I appreciate everybody's support, and the fact that I have more than one follower or one Patreon or one person just subscribed is still amazing to me to this day. So thank you everybody. Have a great day, and I will see you guys later. Bye bye.